Hey guys, welcome again. We're still doing the income statement. We have just completed the gross operating income and now we're moving into operating expenses. So we've been given these ones that we'll just start with very quickly because they are not really affected by any information that I've read on here. So if you want to read, you can read, but you'll see that there's nothing that affects directors' fees, salaries and wages, as well as sundry expenses, except that for sundry expenses, we have a question mark. So it may be the case where we need to calculate it as a balancing amount, but we'll see as we go on. So the first thing that I'm going to do here is just to put the 375,000, yeah. And then the next thing that we'll need to do is to put the amount for wages and salaries as well, which is 365, 540. Let's just make this one as well, 375,000. Make sure they look the same. And then for sundry expenses, we'll just skip that one and we'll deal with it at another stage. All right, cool. So the next expense that follows after that is depreciation. So I've been given a depreciation amount of 124,260. And there's some information that relates to depreciation where we might actually need to make an adjustment. So let's go to information G. So they say corrections must be made in respect of a computer that was stolen on the 31st of March 2016. Guys, that is asset disposal. If asset is gone rid of by any means, whether it's theft or it's an actual sale, a trade-in, that is still falling under asset disposal. And therefore, the depreciation that we want to calculate on this item here will only be up until the date it was within the business, so which is the 31st of March 2016. And the months that fall outside then would be the April, May, and June, 3 months. And then it means that we need to calculate depreciation for the other 9 months that it was with the business. Cool. And they say here that the bookkeeper completed the following page in the fixed asset register using incorrect depreciation method. So she didn't use the correct depreciation method when she was calculating the depreciation, and therefore what you need to do is to use the correct depreciation method and then replace the amount that she has, because you can see here that she calculated a depreciation of 6,300. And then we're told that the depreciation on this asset should have been calculated at 20% per annum on the diminishing balance method. Okay, cool. So the diminishing balance method means that we take the carrying value of the previous year, in other words, at the beginning of the year, and then we multiply by 20%. And because we've had this computer in the business for 9 months up until 31 March 2016, we'll multiply by 9 over 12. That would be something that looks like this. 33,600 multiplied by 20%, multiplied by 9 over 12. And that would give us an answer of 5,040. But here we have an answer of 6,300. So this depreciation that has been given here includes that 6,300 instead of including 5,040. So what you need to do is to subtract the 6,300 and add the 5,040. So that's what you're going to do for depreciation. So depreciation is going to be 124,260. So that's going to be 124,260. We're going to subtract the 6,300, and then we're going to add the 5,040, and that will give us a depreciation amount. It will give us a depreciation amount of 123,000. Cool. That's it for depreciation. The next expense that we'll be dealing with is audit fees, given as 23,000. We had some information that related to audit fees. If you go to, where do you need to go? So you need to go to information E. They say external audit fees are owed further 7,250. So what you simply need to do is to just go here and say audit fees. We'll take the 23,000 as it is given, and then we'll just add 7,250, and then the total for the year would then be 7,000. Oh, sorry. We would then have we would have 30,250. 30,250. I was trying to align, but it's not working with me. Okay, I'm gonna leave it. Cool. And then the following expense after that is let's see which expense follows. It's repairs. We had some information that actually related to rent, but also related to repairs as well. Because what the tenant did was to pay 6,000, and they were paying that 6,000. They were actually paying rent. If you actually look at it, they weren't necessarily paying for the repairs. But the employer did not record that receipt of that payment of 6,000 because they didn't actually receive it. But in essence, what happened is that if we look at the actual thing that happened, we would say that the tenant actually gave the business the 6,000, and then the business used that 6,000 for repairs, and therefore we need to record that 6,000 as business repairs. So already have 100,000 here, and then we just need to add the 6,000 to take into account the repairs that we got. So that would be repairs. Repairs would be 100,000, and we'd add 6,000, and then we'd have a total of 106,000 for repairs. All right. And then moving on from repairs, rent income, interest, bad debts recovered, nay, and then we have packing material. So for packing material, it's typically most times, 7 out of 10 times, they will give you the stock count. So we have packing materials that are still on hand of 3,700, and we have packing materials on our pre-adjustment trial balance of 13,600. So what we simply need to do is to subtract the 3,700 from the 13,600 and get a balance of 3,900. So that is simple enough, and it's going to be repeated so many times. Packing materials. Sometimes instead of packing materials, they will just have consumable stores on hand, or they're going to have the stationery on hand, and then you'd have to calculate the stationery expense by simply subtracting the stationery that is on hand and putting it under consumable stores on hand. And then we'll subtract the 3,700, obviously, and then we'll have a balance of 9,900. Cool. And then moving on from that, we would need to calculate the advertising expense. So the advertising expense, you've been given 20,596, and there's additional information that we'll look at. So let's see how we can go about this one. So here they gave you, say advertising consists of a family contract with the local newspaper for the financial year. So this is advertising, should have been paid for the whole year, but they're telling you here that it was actually paid for 11 months. So the 12th month will be the accrued expense. So it will be added in the balance, because we are obviously using the matching principle that the 12th month should have actually been paid in the current financial year, but it is not yet paid, and therefore it will fall under an accrued expense, but it will definitely be part of our expenses in the income statement. So, and then they say from 1 April 2016, the contract was decreased by 152 per month. So if the contract was decreased by 152 per month, and it was reduced from 1 April, it means that it was reduced only for 2 months in the months that you have actually paid for. So we know that we paid 20,596. We paid this for 11 months. 9 of those months were paid in an amount that included the 152, and then 2 of the months were actually paid in an amount that had that was 152 rand less. So what we need to do in order to be able to get the advertising cost for June, because we're trying to get the advertising cost for June so that we can add it to our current advertising to take into account the accrued expense. So, but what we need to do first is to be able to determine that before the decrease, how much was the advertising per month. So in order to get that, we cannot just divide by 11 because it was not the same throughout all the months. So what we need to do first is to pretend like there was no decrease and no increase in the advertising. And to do that, we'd have to add the 152 back because it was subtracted from the other balance that we had. So we'll have to add that 152. So we have to add 2 of them, right? Because it's 2 months that are falling outside this 152. And then what we need to do then would be to divide that by 11. And then once you divide that by 11, we will have 1,900. So advertising was previously 1,900 per month. And then from 1 April 2016, for May 2016, and then we'll also include the one now for June 2016, it was reduced by 152. So let me say 1,900 minus 152, that will give us an amount of 1,748. And therefore, what we then need to do would be to come into our answer book here and take into account that advertising expense, obviously adding the amount that has been accrued for the following year, but not yet paid. So it will be an accrued expense if we were doing the balance sheet. So we'll say advertising. The advertising cost would be obviously the 2596, and then would add the 17,408, and then would have we'd get 22,344. Cool. And then let's see if there's any other expenses that follow after that. This one is actually given straight from it's given straight from. So there's the loss due to theft, and we obviously understand that it was affected. It should be affected by the information that related to the stolen computer, where we had to recalculate the depreciation. All right, cool. Let's go. So I know that we've been given 9,300 there, but let's think about what is wrong with that amount. So obviously, in order to calculate a loss would be to, what you must have done would have been to calculate, it's actually quite clear. So what we did here is we were calculating the book value at any point in time. So the book value now at 31 March 2016, we calculated it to be 27,300, right? And then we said 27,300 minus 18,000 because we had a book value of 27,300 and the insurance only paid us 18,000. So we made a loss of 9,300. And then there's one thing that we just realized that, well, instead of 6,300, this balance should have actually been 5,040. So if this thing should have been 5,040, it means that this amount would actually be bigger than it is now, because, you know, you subtract 42,000, you'd have said 42,000 minus 8,400, and then you'd have said minus 5,040. So you minused by 5,600, obviously. So it would have given you a bigger amount, and therefore what we then need to do, and then in this case as well, would be to just find the difference between 6,300 and 5,040, and that difference is 1,260. And then we need to add that difference on top of our loss to actually get the total loss that has been incurred as a result of the stolen computer. So we have a loss due to stolen computer. So obviously have the 9,300 as it is given, and then on top of that we just need to top it off with the 1,260 because of that miscalculation and the depreciation amount. And then we'll have a total of, and then we'll have a total of 10,560. And then the last thing that we need to put is the trading stock deficit, which we actually did calculate in the previous video, if you do look at it, but we'll do it again. Trading stock deficit. So the trading stock deficit, we're gonna calculate it this way. So we have stock here of 209,500, and then we're also told that the stock that was returned here was not recorded at a cost price of 21,000. So we just need to take that 209,500, add 21,000. That will take us to 230,500, and then you see that they were returned to stock. And then you'd go to your stock count. The stock count reveals 225,500. We are currently sitting with a number of 235,500. So in that case, we can see that there's a deficit here. So this would be how it would go. So obviously you had the 209,500, right? And then we needed to add back the 21,000 worth of inventory. And then we'll just simply subtract the one that is still sitting on hand for 225,500, and then that would give us a balance of 5,000 for trading stock deficit. And that pretty much is all our expenses, but we are still struggling to calculate operating profit because we do not have one figure, because we have a question mark there for sundry expenses. So what we need to do is to find a way to balance it. And the way to balance it is actually on information J. Here they tell you that operating profit on sales is 15%. In other words, operating profit on sales is operating profit divided by sales is 15%. In other words, operating profit is 15% of sales. So if you take the sales and multiply by 15%, you will actually get the amount for operating profit. So that's what we just need to do here. We'll just take the sales. The sales is 4,741, 600, and then we'll say multiplied by 15%, right? Multiplied by 15%, and then you will get an amount of 711,240. So it'll be 700,011,640, and then what you need then to calculate would be the total for expenses, and it will just be the difference between this 711 and the operating income. So if you say 1,880,240 minus 700, 711,240. Sorry. And then you'd get the amount for the operating expenses, and it would be 1,177,000 for expenses. We'll end the video here for now, and then in the next video, we will look into completing the entire income statement. Cheers for now. See you in a moment. Away.